New York is widely considered the advertising capital of the world, where it feels like every corner and every screen is selling something. Right now, it's selling season for the nation's biggest media companies as they hope to cash in on multi-million-dollar productions, from live TV events to scripted shows and streaming smash hits. But in uncertain times, advertisers might think twice before forking out the big bucks.
The Internet Advertising Bureau did a study recently and in its study, they found that 94% of advertisers are very concerned about the tariffs and the effect on the U.S. economy, and 45% are looking at cutting their budgets for this year. So a lot has changed since end of fourth quarter last year when the planning was going on to today.
In recent weeks, media companies have held what's known as the upfronts, rolling out stars and champagne in a bid to convince Madison Avenue to spend their budgets on network shows. But Court Stroud from New York University, who has deep roots in the city's media industry, expects the current economy to cast doubt in advertisers' minds.
A lot has happened since the planning that was done last year, including Liberation Day, the tariffs, a lot of uncertainty. I would expect that when we're talking about the upfront, and the upfront is to television what Fashion Week is to the fashion industry, that the upfront is likely to be lower in terms of its volume, the total dollars that are going to be spent.
Consumer confidence has fallen to its lowest level in 3 years, according to one key measurement, while JP Morgan recently forecast the chances of a recession in 2025 to be around 50%. Research firm eMarketer reportedly projects that spending on traditional TV ad spots during the upfronts could fall by $4 billion, down to around $13.4 billion. Mark Kalin from Rutgers Business School spent 40 years in the industry and expects advertisers to be more cautious when it comes to spending.
How do you protect stock? You protect earnings. How do you protect earnings? You take short-term hits to expenses.
He says what this means for major media companies like Disney, Fox, NBC Universal and Warner Brothers Discovery is that they may need to offer advertisers more value for their money.
My belief is, or my feeling, and I'm not running ABC or NBC or CBS, but I do believe they're going to have to negotiate and probably offer a lot of extra make goods or time. They'll give up some inventory and try to hold their costs if they can.
Decisions likely to be negotiated in the coming days as advertisers and networks alike are left guessing which direction the economy will take in the months ahead. Mitch McCann, CGTN, New York.